Hello and welcome to this very special conversation. We are going to talk about digital India. We're going to talk about India going cashless. If you recall, it's been almost 2 years since the government declared its so-called war on cash when demonetization happened. Simultaneously, the Digital India initiative was launched. Aadhaar in the meantime, which is our biometric database here in India, has been growing and growing very fast. So what does this all mean for people who use a credit or a debit card? Is plastic going out? Is digital coming in? Is it secure? What is the new technological changes that are happening the world over? Joining me, two very special guests, Bob Reany, who's the Executive Vice President at Mastercard. Thank you, Bob. You do a lot of work in this area and we'd love to hear what you're doing. And Sudipta Roy of ICICI Bank. He's the General Manager in charge of the cards business. Thank you very much, Sudipta, for joining me as well. Bob, exciting times in India. From where you sit, how do you view India?
For me, and for Mastercard, India is really a hotbed of innovation, mainly because of the transformation that you were just talking about and the number of tools and focus in this market. So we're working quite closely with the banks in the market and the merchants to make sure that we use this new technology to have better consumer experiences while it's still safer. So more safe and simple at the same time is really the key. We definitely see just a lot of innovation, a lot of investment in this market.
In fact, I was reading reports, you've invested quite heavily into India and you're doing a lot of investing here to build out secure systems. I think one of the things, Sudipta, that a lot of people become a little apprehensive about going digital is the fact that, is it safe? Is it secure? So while we distill down further and talk more on specifics, but first question for you, is the credit card ecosystem secure in India, according to you?
Thanks, Vivek. I think the credit card system in India is very, very secure. And I will talk about credit and debit because finally the underpinnings of the security system on both the transaction mechanisms are the same. In fact, India was one of the very first adopters of the 3D Secure or the second factor method of authentication, which was mandated by RBI, if my memory serves right, way back in 2009. India was one of the first movers there. And I do believe that after the second factor authentication system, the 3D Secure system was launched, e-commerce transactions became far safer in India. The industry always has been on the forefront of trying to keep security at one of our guiding principles while enabling transactions for the common customer. And approximately from the amount of transactions that we process, the number of cases in which cards get compromised, they do get compromised at times, are very, very, very minuscule. To take it one step further, as a bank, we have, as ICICI Bank, we recently have launched our new mobile app card security platform, which is live on iOS and Android both. And actually, you can turn off and turn on your cards at the switch of a button. You can disable your international transactions. You can enable your ATM transactions or disable them. If you see your card is suddenly compromised, you can temporarily block the card directly from your mobile phone. So I do believe that the industry has been working continuously to make it safer. And I guess India is probably one of the more safer places to transact in cards because of the various controls put by the banks as well as by the regulator.
Bob, you've been doing a lot of work on biometrics. There was a comment from one of your colleagues who represents the Asia Pacific zone that, in most part of this region, almost 50% has actually gone digital. So it's not the physical card really that you're using that we've been used to, that, when you talked cards, it was the physical card you went and swiped. But it's actually going digital. You don't really need to use that physical card. Can you tell us a little about some of the innovations on the biometric side that you're doing back home?
Oh, yeah. And I think that 50% of what we call card not present, meaning there wasn't a physical card involved, that's probably an industry leading number. So again, a lot of innovation, a lot of change in markets like India. And what we did, since we looked at the two-factor authentication, that's some way to verify the consumer's identity, is we looked at some breakage in the system because some of these things have been in place for quite some time, and technology has advanced. And one of the things that we've seen is asking a consumer to remember something is not a good idea. We've also seen that sending one-time passwords through things like through SMS is not always the best consumer experience either. So we look for alternatives where a person wouldn't have to remember anything or have to receive something on the phone that may or may not get there. Biometrics is a way that a consumer can quickly and safely authenticate themselves, and we did work on 3 different modalities. We did fingerprint, which would take advantage of some of the innovation in the phone space. We did facial recognition, and we also have worked on voice because that was something that will help us when we go to things like connected cars and other use cases when you have a speaker in your home. So those are the 3 main modalities that we've worked with. We've also worked with things like iris when we have an iris scan on a phone or other devices. All those ways are ways for consumers to quickly and easily tell you who they are without having to remember anything or use some very clunky consumer experience. It has a lot less breakage in it. We find that consumers really like that. We have done some surveys. 93% of the consumers felt safer when they used a biometric. And it keeps the data in a nice, safe place, too. That's another innovation that's come. It used to be that the data had to be centralized in a big database that could potentially be compromised. And that's, as we've gone on and worked and learned things in the industry, we've learned that that's not always necessary. You can keep a lot of this data under the consumer's control, maybe on their phone, where it's not in a big database to be compromised. So those are all learnings we've had through biometrics: better consumer experience, nothing to remember, safer data storage. And it's the reason why we're really behind that, because technology is allowing us to be safer and then still let the consumer have some control over the data.
And are you saying that these technologies have been rolled out already in, say, the USA and some of the other countries?
You see a lot of advancement in usage in biometrics. Again, not news to India. There's been a lot of biometric work in India for many, many years. Other markets, it's a relatively new phenomenon over the last 2 or 3 years. We have our own biometric services that have been launched in 37 markets. But I would say that it's getting to be more acceptable from consumers' experience standpoint, and their desire for convenience is really driving a lot of it. When 5 or 6 years ago, even in a market like the United States, we would do surveys and say, would you do a biometric? And consumers would say, fingerprint, that's what you do when I get arrested by the police. And then, interestingly enough, though, when we start to advertise it or have people use it, they'll stand in line overnight to get the newest phone that's got the easiest, more useful biometric experience. So consumers have warmed up to it, I would say, globally. And convenience always rules, and it's my job to make sure that it's not only convenient, but it's safe. And that's where we put a lot of technology behind how that's secured, how we store that, how it's matched, where it's put, where it's not put. All those things are factors that technology has really advanced in the last few years. And I think that as we bring it into more markets, you'll see a lot more usage of it.
Sudipta, as the leading private sector bank, do you see yourself being able to adopt some of these technologies? Do you work closely with entities like Mastercard to be able to quickly replicate these kind of innovations here in India, or is there a regulatory issue out there?
No, I think RBI has always been very enabling in terms of adoption of new practices. But the fact is that obviously we go through a period of proving the technology in a pilot basis before we scale up to sort of wide-scale adoption. Now, if you were to say, biometric, yes, probably it remains a work in progress, and biometric transaction for payment transactions still, other than Aadhaar-enabled payment system, which has been around in India for almost close to 18 months now. On the card-based, really, we have not launched anything biometric. But in terms of other technologies which have gone live in India in the recent past, I would say the most significant has been tokenization with Samsung Pay, in which, and to sort of explain tokenization in a simple form, in your normal plastic card, you have your one card number, which is a 16-digit card number, which in our parlance we saw the PAN number, the permanent account number, right? So now what happens is that, that particular number together with the expiry date and the CVV, if somebody lays their hands on it, it can be compromised. Now, tokenization, what it does is that it creates a large number of virtual card numbers linked to that particular main PAN, such that when you are doing a digital transaction, especially when you are doing from a sort of a doing a transaction with your phone, for example, either on a near field communication or on Samsung Pay, which is an MST transaction. Really, what changes hand is not the actual card number, but the tokenized card number, which is also encrypted. Just to give an analogy, right? In your house, you have one door, right? Now, the thief knows that that is one door through which you can get into. But in front of your house, now if I put 100 doors, then the thief has to figure out which door is the actual entry, right? So virtual card numbers and tokenization actually work in that way, in the sense that we create a large number of card numbers, many of them one-time use, so that once the transaction is done, that card number is null and void. So tokenization is actually one of the biggest advances that the payments industry has made over the last couple of years, or which actually form the underpinning of most of the mobile contactless transaction, where you actually do the contactless transaction from your mobile phone. And tokenization is also taking place in e-commerce transactions as well. So that is the next phase where the industry will move, where all your e-commerce transaction will be done using tokens, which will make it far safer. So as a cards industry in India, tokenization is now adopted by many issuers, especially for contactless transactions for mobile phones. And we do believe that with the new standards which are being rolled out by the networks led by Mastercard and some of the other industry networks, is the new standard of 3D Secure 2.0. We have been working on 3D Secure 1, which is the normal 3D Secure one-time OTP based or static password based transaction. And once 3D Secure 2.0 comes, which is in the works, then not only we will look at the transaction data and we'll look at the one-time password, but we'll look at from where the customer is doing the transaction from. Is he doing the transaction from the same device in which he has done the last 5 transactions? So the number of parameters that will be available to a bank to take the decision whether this is a transaction is a genuine transaction or a non-genuine transaction or a risky transaction will be far more. So that we will be able to take more informed choices at that point of time. One of the objectives of our industry is also to dilute the friction that we see in some of the digital payments, and because there is friction in some of the digital
What kind of friction, if you could explain that?
Friction in the sense that you have to get an OTP. Now, if you're in a bad network area, you are not getting the OTP.
So things like, for example, the fingerprint reader, the biometric, is that something that we can see happening here, that you don't need to?
Yeah, so then you don't need to remember a password, you don't need to, so it's something that is always available with you, right?
How far away do you think we are from that?
So obviously the sort of the industry framework and the rules needs to be formulated around that. Right now, for example, the EMV pin, chip and pin based industry standards are very well established all across the world. And I do believe that we have some distance to cover because the solution has not to work in India only, the solution has to work globally, right? And at least few large markets has to adopt it for it to gain momentum and then snowball. So this is an emerging technology. And once the sort of the underpinnings of the rules of the association, the network association on the technology is clear, and once the issuers, the banks actually are sort of more confident about adopting the technology after regulatory approval, I think it will scale up decently.
Are you working, Bob, closely with India's banks to see how this rollout can happen faster, or is it more of a regulatory issue? Or, because we've rolled out Aadhaar, which is among by far the world's biggest biometric-based identity system. For a lot of financial products now, we have eKYC, the Know Your Customer is all online. We've built in place now, we've got a draft data protection law as well. So I think all the pieces, as they call the India stack, are coming into place. Is it more now about you working with banks more closely and the regulators to make them understand that why this can be a game changer?
Absolutely. And you have to work with both the banks to understand the technology and prepare for the technology, give us insights to what the market needs, as well as the regulators to let them understand what's changed, right? Because some of this regulation is been in place for some time. And so as technology changes, you have to come back with data. Nobody's going to take our word for it. We have to come back and say, in Europe, for example, there's a big legal change called the PSD2, the Payment Service Directive 2. 30 markets in Europe are changing, much like the changes that went on in India years ago. We can take some of the data as we put in the newer techniques and then bring it to people like the Reserve Bank and show them how that's performing and affecting the market while we work on the user experience and integrating it with our partner banks. So yes, we have to work with both the regulators and the banks, but I think the real key is we've got experience from other markets that we can take and show as an example of how these changes affect both the friction, which frustrates consumers and causes transactions to fail, as well as the improved safety. One thing that kind of came up in one of the last rounds of discussion was, okay, we have tokens which hide the key data. We have biometrics which help identify the consumer. We have other layers of security like where you're at, we call geolocation. If we put those 3 or 4 or 5 or 10 things together and we use things like machine learning to figure it all out, now I've got a really great ecosystem that's much more advanced than maybe a message that goes to your phone. I can look at all those factors and start to have a great experience. And so getting the data, modeling it, working with the banks, proving it to the regulators, all part of our job.
In fact, I think if I'm not mistaken, you made this quote that, from an engineering standpoint, you've been working for many years on this whole thing and now you finally got it. Exactly. And I think now it's more about rolling it out. Is that really where the challenge is?
It is.
The technology is being developed. It's more about getting people to use it.
Yes. Well, it's a life journey when you work for a company like Mastercard, because we don't just do it for ourselves. We do it with banks. We do it with merchants. We have to help the regulators. So the technology arrives. We have to work to get it implemented across many areas. So the technology is ready. Unfortunately, when you want to move we have a saying, a rising tide lifts all ships, right? So this new technology is a rising tide, and we want to get everybody to work together to implement that. And so the technology is ready. We went through standards processes, which I know are boring to people, but if you want everybody to do everything together, there's industry standards that have to be ratified, debated, published, and we've gone through that process. So it is the time. This is the moment of truth. New stuff is coming, more data, less friction, newer techniques, and the time is now to implement it. So that's really where we're focused.
Right. Sudipta made the point about e-commerce, and we are going through a phase in India where there's a boom in e-commerce.
Right.
Do you see yourself as a platform working closely with some of these companies and helping them go digital as well?
It's a partnership. I have to tell you, this is a sophisticated market. The people, because of demonetization, because of Aadhaar and having 1.2 or 1.4, I never can keep up with how many billion people are aligned with it.
1.3, I think.
Is it? Okay, I was right around it. You have some amazing tools, and you have, I know that it can be, regulation can be painful, but it can also be a real market mover. So this market, to get people to do things isn't the problem. It's to get people aligned, and the number of changes that are occurring is to get everybody to agree on what the priorities are. That's the issue. So we come in as kind of a market stabilizer and a market kind of aligner. And it's a partnership. We don't come in and say, this is what you should do. We come in and say, this is what we've learned. How do you want to implement it? It's like I said, quite a sophisticated market. We also are doing things like investing in our own development centers here, as well as starting to find there's a lot of fintech in this market, a lot of small players that are in the government-sponsored startup programs, and we invest with those players as well to try to help really bright people have their ideas kind of spread around. So it's a lot going on in this market, but it's a great market to work in.
Sudipta, from a cost point of view, we read recently, even Mastercard, for example, brought down some of the costs that it charges. Do you think, again, within the ecosystem, look at it from the merchant's point, look at it from a consumer's point, do you see that as a trajectory which is only going to keep going down?
See, I think understand that, the entire cards and basically the payment system, which it operates on the four-party model, where you have the customer, you have the issuing bank, the acquiring bank, and then the merchant. So obviously we want to make things affordable because obviously some of the global economics that play in advanced markets, developed markets, might not be suitable to India. But however, there are real costs of running systems, right? Especially, people only probably look at the top, which is visible. They do not look at the iceberg of the payment system, which is below. And you have your terminals, you have your terminal consumables, you have systems which run 24/7, you have huge data centers which back that up, you have disaster recovery centers, you have the real-time fraud controlling systems that you have a large army of people actually who is employed in running this system. That cost is not visible. What is visible is that I have to charge a sort of a merchant service fee to the customer to the merchant for enabling the transaction. The customer pays nothing. Now, the government, in consultation with the RBI and with the banks, we have progressively brought down the debit card merchant discount rates. And I do believe that at this particular level, the way they are tiered, and the government is reimbursing a large cost of the transactions up to 2,000 rupees, which is a step, I think, in the right direction, and which should lead to wider adoption of electronic payment means by merchants. I do believe on credit cards, there is a real cost of running the system in terms of your cost of credit. Typically, you tend to see a little elevated loss rates on credit cards because of some of the write-offs that happen at times. So, I think the credit card rates I believe, are at the right level right now. And I think debit cards, because of the intervention of the government, RBI and the banks, I think also has reached its right level, right? So I think we are at that position where, the industry can sustain itself at these rates. And I probably would not recommend any downward revision of the rates because beyond a point, the industry will not be able to sustain itself.
You're saying they're fairly rock bottom?
They're fairly rock bottom. This is the bare minimum. In fact, in the developed markets, the rates are far, far higher, right? So I do believe, and I think because of the government reimbursing the transactions fee for the merchants up to 2,000 rupees, I think it's actually much economical for the merchants to.
How dramatically did things change post demonetization? Have you been able to penetrate far more deeply? Are you
Yes.
seeing the person, not just in the metros or urban centers, but even in rural India, actually adopting going cashless as a ethos? Has that change happened?
I think it still remains a work in progress. I think if you look at demonetization was, in November 2016. And, we saw our volumes double in exactly, because there was cash scarcity in the system, in exactly 4 months, our debit cards volume doubled. Credit cards moved, but debit cards moved really faster. I do believe that there were a lot of first-time users who actually started using their debit cards for purchase transactions. Some of them went dormant after the cash came back into the system, but it settled at a much higher level, at least a 8% or 10% higher level within a period of 4 months in terms of transaction volumes. And we have been seeing it steadily go up after that. And also what happened was that, before demonetization, there was 1.2 million terminals deployed in the country. As of October 2016, we had 1.2 million terminals. As of April 2017, we had exactly double that. So in a 4-month period time, the industry put together 1.1, close to 1 million terminals, which I do not think in the normal course of time would have happened. And that actually pushed a lot of electronic acceptance into the market. The market continues to grow at healthy rates. But to be specific to your question, we see larger amount of activity and acceptance for cards in the smaller towns and cities, maybe not in the villages still yet. But at least, we see robust transaction volume from Tier B and Tier C towns coming in, right?
Bob, there was another expert comment which said that while increasingly, cashless means not using the plastic, but going digital with your card, but the fraud rates are also much higher in digital than they were in the plastic regime. How have you dealt with this aspect in other countries? So in India, I think the biggest concern we have is, while the bank does its bit, it freezes it. It's also now, I think, on the credit card gives you back if you've, complained within a certain time.
Yes.
But I think somewhere from a customer's point, you feel I have not seen that guy being punished. And I think that's more a security enforcement issue. But how did developed countries overcome this challenge where probably, the rates of fraud are far lower than out here?
Well, I would actually tell you that the rates of fraud for a digital transaction in India aren't that much higher than a card. So that's got a lot to do. So the statistic that you quoted actually is absolutely true in markets that don't do authentication. They don't send an OTP. They don't get a fingerprint. They don't do anything. They just let the transaction go. Fraud is 3 times higher for a e-commerce type transaction than a regular going into the store transaction. So that's generally true on a global level. Because India has required authentication and they make the person validate who they are, that number is much, much closer in this market. So interestingly, what I'm doing in developed markets is trying to get authentication to occur more frequently. So the fingerprint, all the things we talked about, the layers of security, and using machine learning, which is a newer thing, where we take all these bits of data and we let the intelligent system start to identify where the fraud is, instead of creating rules and having people do so much of the work to analyze these transactions. We're actually analyzing them with a lot more sophisticated system. So authentication, more data, and machine learning, those are three ways that we're really accelerating the decline of fraud in the card not present space. And again, the good news is we don't have to add a lot of problems for consumer. The consumer doesn't really have to do anything extra. So those are the real three tenets of what we're doing.
It's an interesting point Bob makes, because I think perception-wise here we still worry about the fact that, oh my God, the minute I go digital, I'm under attack. And, we are probably better off than other markets in the world. But perception, how do you fight that perception as a bank, as a leading bank?
See, I think, yes, there is a perception and there is an overhang that, using digital methods of payment is probably far more riskier than using cash, right? But, the solution to that is, couple of things. First is, foremost thing is more customer education as to what to do the right things, right? For example,
do you believe that there's scope for more customer education?
Yes,
as an
we do
industry,
believe that.
not
Yes,
specifically
we do believe
company?
that there is more scope for customer education, both by the banks as well as by the Indian Banks Association, which we have been doing a couple of rounds, as well as by Reserve Bank of India, as you know, and you have been seeing Reserve Bank of India has been quite active over the last couple of months in terms of doing. But simple things like you do not give out your password to anybody. No bank ever calls, right? People fall. Most of the fraud incidents that is happening in India is actually very low tech, right? It is human, right? It is human weakness that is actually compromising things, not technological weakness. People calling and asking you, please give me a one-time password, please give me your card number, please give me your CVV number, expiry date. Now, and we see an astonishing number of people who are actually very well educated giving those
falling
for it, right? So I think one solution is technological, customer education. There's the first frontier of attacking sort of fraud. The next frontier is that, even if somebody gives out, right, how do you figure out whether that's a genuine transaction or not? And that is why the iceberg below, which is either tokenization or device fingerprinting, or as Bob said, geolocation-based solutions. Biometric is a good solution, but biometric is more for point of sale, face-to-face transaction. Biometric for e-commerce is probably a little away now. And so, if your first round of defense, which is customer education, fails, then how do you back it up with technology as your second round of defense? And I do believe that banks in India actually have adopted global practices. And I would think the practices that we follow are probably at par with any global bank. In fact, the practice of putting the control in your hands, deactivating, activating your cards, deactivating your type of transactions. You can turn off your online transactions on ICICI Bank iMobile app right now on your card, right? So you come back from overseas, you turn off the international transactions. So three things: education, technology, and giving customer control in hands of the customer will make it far, far more safer. It is a journey. It will not happen overnight, but it remains a journey. But I do believe that with efforts of Reserve Bank of India and the banks, I think we have been able to get across to customers a decent amount of message that using digital is safe, and that is why we see the uptick of digital transactions. And besides, now the comfort that they get from the Reserve Bank of India guideline, saying that if you have not done the transaction and if you dispute it within 7 days, then you are not liable for it. I think that goes a long way in assuring the customer that even if something goes wrong, I'm not liable for it.
Bob, while Mastercard does work with the government in India, with several state governments as well, and but how do you see yourself as a company, being part of the digital India story? Because it's a new thrust which the current dispensation has given to say that we must be a very digitally savvy society across multiple roles. It's not just about a card, but it's about use technology more and more to make society better. Do you see an increasing role for companies like yours who have the global technology, global best practices to work more closely with the government?
Absolutely, and with the market in general. We have on-soil presence now in India that's gotten much bigger. I think we're up to close to 2,000 people in India with some of our local development centers. We're bringing technology that we've done acquisitions as a company, and we're bringing that technology in market. We're working with the banks. We're working with the regulators. So we are also expanding our role. We used to just talk about payments, and I've talked a lot about authentication today as knowing who you are. Well, you want to know who you are, or the bank wants to know who you are, or the merchant wants to know who you are, whether you're going to do a payment or whether you're going to do a funds transfer or whether you're going to check on your balance. So our role has kind of gone from just payments to helping with a digital identity of who you are. In fact, we have a role. I don't know if many people know it, but we're a network that connects to the Aadhaar database and helps verify identities for things like, is that child able to get their lunch at school? Is that person attending their job? So all these things that the government is pushing for, we are helping by investing in technology, having a local presence, and expanding our role. And I think the identity piece of it, of knowing who a person is so important in your digital life, whether it's payments or if it's getting your lunch at school. It doesn't matter what you do, it's that we know you are, and that we can help get those, whatever the service is. And that's really our focus, is on things like that, and just bringing the technology to bear. It's an exciting market, so it's a market that's going to change. And if we're here and we're part of it, then I think we can add a lot of value.
It's been a pleasure talking to both of you. Thank you very much for joining me here on this very interesting conversation. Thank you.
Thank you, Vivek.
Thank you very much.